So this is question number 6 from the Institute material, Ind AS 110 consolidation. Test your knowledge. Question number 6. Then question number 7 was this. I know it is 8, but for question number 8, they said it is continuing from 6 and 7, right? I should talk about that first. So question number 8, putting the things, 1 minute. Okay. Uh, so let's read the question once and then confirm me that this is the question. Okay, let's read it. On 31st March 2002, Blue Heavens Limited acquired 100% of ordinary shares carrying voting rights of Orange Country Limited for rupees 6,000 lakhs in cash. Okay, they acquired 100% for 6,000 in cash in controlled Orange County Limited from that date. The acquisition date, the statements in financial position of the Blue Heavens Limited and the Orange County Limited, the fair value of the assets and liabilities recognized on the Orange County Limited balance sheets are given. Blue Heavens holding company carrying amount does not matter for us. Orange County, that is subsidiary companies, that's very important. Carrying amount and fair value. Carrying amount, fair value, the fair value adjustment we should do it. Building, inventories, trade receivables, cash, then trade payables. Prepare the consolidated balance sheet on 31st March 2002 of the group of the entities Blue Heavens and Orange Limited. I hope this is not a thing we need to discuss. The facts are same in question 6 above. However, Blue Heavens acquires only 75% of ordinary shares, meaning 25% NCI, to which the voting rights are attached, of Orange County Limited. Blue Heavens pays 4,500 lakhs for the shares. Prepare the consolidated balance sheet of 31st March 2002 on the means date of acquisition of the group entities Blue and Orange. I hope this is also not the problem. This is what the issue, I think. Facts are given same as in question 6 and 7. Blue Heavens Limited acquires 75% of Orange County. Blue Heavens Limited pays 4,500 lakhs. I think same as the previous one. And at 31st March 2003, that is 1 year after the Blue Heavens acquires the Blue County or Orange County Limited, individual financial statements of the financial position and the statement of comprehensive income of Blue Heaven Limited and Orange County Limited are given. Blue Heavens, Orange County, PP, investment in Orange County, current assets, inventories, financial asset, cash, equity liabilities, share capital, retained earnings, financial liabilities, trade payables, statement of profit and loss, revenue, cost of sales, administrative expenses. Note, profit for the year 800. Does the 800 match correctly? They had 10,200 and it became 11,000. So 800 is the profits, and 2,300 was there, and 2,300 and 550. 2,300 and 550, 2,850. Yes, the profit is perfectly matching with respect to retained earnings. Blue Heavens Limited estimated the goodwill as impaired by 98. The fair value adjustment to the building and the PPE in respect of building. All the buildings have estimated remaining useful life of 20 years on the date of acquisition 2002, and estimate residual value of 0. Blue Heavens Limited uses straight line method of depreciation. All inventory held by uh, the Orange County still unsold. Sorry, was sold on the 1st March 2002, was sold during 2003. Oh, all the inventory was sold. Prepare the consolidated balance sheet of the group of the entity on Blue Heavens and Orange County. I will discuss this problem. I'll solve the problem in our regular format, what format I follow. But is there any particular issue you are confused about this problem? Of course, if you look at the institute solution, you might get confused on every aspect. But any particular aspect that you are having concern? Okay, you're not able to understand the institute solution. Okay. If you're not able to understand the solution, no problem. You just have to follow our format. Anyway, we'll do it here. Hopefully, you get the more confidence. You know the format we follow. Let's follow that structure. Simple structure. Working note formats. We'll start with particulars, amounts, goodwill calculation, con PL, NCI. Percentage wise, I think it's 75%. Yeah, 75% directly given, 75%, 25%. We'll start with a subsidiary company. What is their share capital? Subsidiary company share capital 2000, which was same earlier also 2000, no change. 2000, 75%, 1500, nothing to con PL, 25%, 500. So this is share capital. Okay. Can you tell me what could be the next line item? Retained earnings, correct? Retained earnings. And retained earnings I require pre-acquisition and post-acquisition. How much is pre-acquisition? Balance sheet only they have given. So it's a straightforward thing. On the date of acquisition, retained earning was 2,300, which is pre-acquisition. And that became 2,850, which means post-acquisition is 550. No adjustment for dividend. So pre-acquisition is 2,300, post-acquisition is 550. I hope it's straightforward. Pre-acquisition is 2,300, post-acquisition 550. 75% of that. Uh, 1725. Nothing to con PL. NC at 25%, 575. And post acquisition will not come in goodwill column, will come in con PL column. Which is 550 means 412.5. 25% means 137.5. Okay, so share capital done, retained earning is done. Then what we have to look for is uh, fair value adjustments. NCI adjustment, have they given fair value something? They have not given, so NCI adjustment not required. NCI fair value not available. We go with proportionate goodwill method, and therefore, or should you go for fair value adjustments? Seconds. Okay. Uh, okay, fine. So let's go for fair value adjustments. Fair value adjustments, what we have is regarding question number 6. I have to go for it. Building 3,000 is 3,300. Inventories 500 becomes 600. Only two changes are there. Fair value adjustments on building and fair value adjustment of inventories. So two adjustments are there. If you have any deferred tax concept component, that also I would have considered. Since the fair value is high, means that profit is there. Profit, we are not paying tax immediately, so we are going to create a deferred tax liability. If there was anything, I would have taken deferred tax liability. Inventories and building, both the adjustments, I will do it here. Fair value adjustments. It is 500 minus 600 and 600 minus 500, 100. and that 100 I'll take it in the proportionate column. 75 means 75 and 25 means 25. Then fair value adjustments, PP, it is from 3000 to 3300. So 3300 minus 3000 means 300. Again, 75, 25. So how much you get? 75 means 225 and 75. Is that correct? Okay. So then what else will come? Fair value adjustment is done. On fair value adjustment, whenever you have a revaluation adjustment, subsequently there will be a depreciation adjustment. So depreciation on PPE, additional depreciation, incremental depreciation. How much we are going to provide? The useful life is, they said, in respect of building, remaining useful life is 20 years. The incremental amount, whatever we provided, spread across 20 years, only 1 year completed. So this will be 300 divided by 20. How much you get? 50, na? Minus 50, because it is a depreciation, incremental depreciation, that is a con PL column. 15. So 75% means minus 11, minus 11.25. And 3.75. Okay. So depreciation is done. This is done. Fine. Any doubts on these? The regular adjustments only, right? Share capital, retained earnings pre and post, fair value adjustment of inventory. It's a capital item. I mean, pre-acquisition item. Fair value adjustment, revaluation on PPE, and whenever revaluation comes, depreciation comes. Okay, they are regular adjustments. There is one a special adjustments, not special. I would have discussed earlier, but still, that might not have came the problems as an adjustment, the institute problems, which is this. The inventory by Orange Limited, Orange County Limited, was sold during the 2000 to 2003. Okay, so this one point would not have been specifically adjusted, but anyway, do you remember what adjustment we used to do in other problems if the inventory was unsold? This fair value adjustment of inventory, if it was unsold, I would have added in the closing stock. In the balance sheet inventory, I would have added. Do you understand that points? The increase in the fair value, I would have added. Correct? Because the inventory is unsold. If that was the assumption in the earlier problems. Now here inventory is sold. Now think from the subsidiary company point of view. When this inventory was sold, they would have taken to P&L accounts, and they would have taken to P&L account means they have already recognized the profits. Inventory would have taken to sales, right? And sales means they would have already taken it to P&L account. It's already taken, meaning it's already part of this revenue of the Orange County 1900, or already part of the cost of the sales. So basically it is already part of it, in the sense it was already considered in the P&L account. If I include it again here, or if I have to adjust here, I have to subtract. So basically, profit already considered and inventory sold should be subtracted in ConPL. Why it should be subtracted is because when I take this 412.5, this includes the value of inventory sold, include this profit adjustment. So basically, what we should do here is uh, fair value adjustments on which inventory is sold. Fair value adjustment on which inventory is sold, that should be subtracted entirely from ConPL entire amount, the corresponding amount. This 100 entirely subtracted from ConPL. Basically, it is removed from ConPL. It is to be taken out from P&L account. Why it is taken out of P&L account? Because it would have been already taken. So when I take this retained earnings, you see, when I take this post acquisition 550, that 100 would have been already taken there. Therefore, I have to subtract in con PL column inventory, which is already being transferred. Actually, I should split between con PL and NCI. Effectively, it will affect both the thing. So please divide between con PL and NCI 75 25. So I'll wait for 2 minutes. Please ensure if this adjustment is clear. If not, let me know. If you have any doubt on this adjustment, you can let me know. Fair value on the adjustment of inventory which is already sold. Now I'm going to subtract in con PL and NCI. Okay, so I hope it's fine. I'll just repeat the adjustment once more. When you prepare the P&L accounts of subsidiary account, this profit would have already been considered. When you sell, this profit would have been already considered. So basically, if I don't eliminate, it will amount to duplication. That duplication element is what I would like to subtract. Okay, I hope it is clear. Then we have impairments. You can take it here or you can take it later. Impairment of goodwill. Oh, goodwill, they are given the amount. How much impairment of goodwill? Goodwill impaired by 98. Now, can you please tell me impairment of goodwill? Will I take only to con PL, or will I take con PL as well as NCI? This goodwill will only be related to holding company share because we have not done any NCI adjustment. We have not recognized the goodwill relating to NCI. So this goodwill impairment, I should only take it to con PL column. If it was and goodwill related to NCI was also there, NCI valued fair value method, in our working note I would have done NCI fair value adjustment, NCI adjustment. If that was done, I would have taken to con PL as well as to NCI, but here I'll take only to con PL because this goodwill is only related to holding company share. Then holding company, coming to their investments, holding company investments. Uh, 4,500 subtract in goodwill. Holding companies retained earnings, entire amount in ConPL. Holding companies retained earnings 11,000. Entire amount in ConPL. Okay. So can you tell me the total? How much goodwill you get? How much ConPL you get? How much NCI you get? And then then we can prepare the balance sheet quickly. Okay, tell me the goodwill. 975. 975 goodwill. Oh, sorry. Goodwill adjustment. That impairment I've not considered, right? Impairment. It goodwill. Goodwill column also we should consider. 98. I have to write off goodwill means goodwill is I'll put as a positive number because in our method goodwill come in negative column. So if I do positive, goodwill will be reduced. So plus 98, I forgot to write the goodwill column. See how much you get? $877 minus 877 minus. So which means goodwill is 877. It's better write in the exam you write like this so that in our format negative means goodwill but value may not know it. So you better write like this. What is ConPL? No answer. Okay, I'll calculate. 412.5 minus 11.25 minus 75 minus 98 plus 11,000. 11,228.25. Then NCI 500, 575 plus 137.5 plus 25 plus 75 minus 3.75 minus 25. 1283.75. Okay. Let's quickly prepare the balance sheets. Hope you have done till here. Consolidated balance sheets. Start with particulars, notes, amounts. Start with assets, non-current assets. That PP. We had PP balance from the balance sheet 6,500 plus 2750, 6,500, 2750 plus fair value adjustment. The fair value adjustment revaluation 300, depreciation 15. 300 minus 15. 1,500, 2750 plus 300 minus 15, 9535. Then intangible assets. Intangible assets means goodwill, which is 877. Then current assets, no change. Inventories, financial assets if we have cash. Trade receivables, then cash. Okay, inventories, no adjustments because inventory already is sold, so no need to adjust any fair value here. 800, 550, 1350. Trade receivables, 380, 300, 680. Cash, 4170, 1420. 4170, 1420. 5590. So total 9535 plus 877 plus 1350 plus 680 plus 5590. 18,032. Liability side, equity and liabilities. Equity, shareholders funds, share capital, other equity. Share capital only holding company, 5,000. Other equity as per working notes, 11 to 28.25. NCI as per working notes, 1283.75. Then non-current liabilities. Any non-current liabilities? Nothing. Current liabilities, only trade payables. We have financial liabilities. Current liabilities, only one we have. Financial liabilities, which is trade payables. No adjustment also, I think. 350, 170. 350, 170, 420. I hope the total tallies. 5,000, 11,000 to 28.25, 1283.75 plus 420. Something we missed. 520, yeah. Okay. 520. So 18,032. Okay, just to confirm ourselves, we'll look at the institute solution also. But if you have any doubt on these things, any of the elements, you can ask. If you're comfortable, let's quickly go to institute solution and I'll share that. I mean, I will look at that as well. Working note once. Okay, I'll put the working notes. Okay, this is the working notes. Is it done? Any doubts? Okay, very good. I'll just share the institute solution. Let's take a look at this. If you have any doubts conceptually from the institute solution, we can take a look at that as well. Okay. Is the solution of the institute visible? Let me just go through the solution. Uh, Question number 6. They have done the calculation of the balance sheet and all, working note for goodwill. Question number 7. Non-controlling interest. Okay, that's what they've calculated. Buildings 7,000, 3,000. Goodwill 975. I think that was before impairment. Investment that is not there in the consolidated balance sheet. Goodwill consideration 4,000, 1175, 975. We have done the impairment also 98, so we got 877. Regarding the NCI, on the date of acquisition they did, and anything share of profit they've added, and while adding share of profit, that 100 group inventory they have subtracted. You see 100, you remember inventory fair value adjustment we have subtracted. That's what they also have done. And 15 depreciation also they have subtracted, and that's how they got 1284. They have rounded it off. Alternative method also they have given. From the P&L account, you subtract the inventory and you subtract the depreciation as well as the impairment adjustment parts, and whatever remaining amount they have taken the share of holding company share and NCI share. And balance sheet of the consolidated one, buildings 9535, 877, you remember, goodwill after impairment, trade receivable cash no change, other equity amount is I think 11,228 only we got it, and NCI is 1284 is what we got it. Okay, so working notes and all they have given. uh, Impairment of goodwill, you see 98 they've adjusted, additional depreciation 15 they've adjusted. In respect of inventories, it was duplication, so we removed from ConPL and NCI, hope I remember. And so basically that they have got the balance. Okay, this is next question, I think. Okay, this is next question. So from the institute question, I know they have done the so many detailed calculation, but conceptually we also done the same thing and we got the same answer. Uh, from the institute solution, if you want me to explain any calculation, you can ask. Now it's so fine. Very good. Good. Others, if you have any doubts, you can ask. Because of the institute detailed solutions, you might feel you missed out. But when you follow our format, everything is in one shot, one place. Things are more comfortable to connect conceptual. In case of chain holding, is it possible to follow our method? Absolutely, yes. Chain holding also, you can follow our method. Only thing I told you, you write one subsidiary, then holding company. While writing the last subsidiary, you should take percentage of percentage. That is the percentage, like 80% of 60, 48. That will be the holding company share. Remaining 52 becomes NCI share. Only extra point to be considered, the investment made by intermediary holding. That also we write investment, and one portion comes in the the goodwill calculation column. One portion comes in NCI column. So absolutely yes, you will have a chain holding also we can do in our regular format. Maybe I'll upload one of the videos as well on the, it's already part of my RPL lecture, but anyway, in my YouTube channel there is one specific playlist, hope you have followed it, FR specific problems. There I'll also upload one uh, chain holding problem solved in our format. I will do it. One of the exam question only, I'll take it and do it, so you can be more comfortable after following that. Okay, so I hope things are fine. Hope you got more confidence, consolidation. Hope I have not taken out your confidence. The objective is to give you more confidence, not taken out. Already uploaded or going to upload. It is part of my RPL lectures. There is one separate set of videos called as RPL lecture. But anyway, I will upload. By end of today, I'll upload uh, problem on the chain holding problem. One of the previous question only I'll solve it. And in our format only, we'll solve it. Fine. Okay, good.